Welcome to the Long and Short. Maestro here. Thanks for tuning in. Every day on this channel, we try to make you a better crypto trader by showing you smart money, price action trading techniques from a long and a short-term perspective. This is the fourth installment of our How to Be a Successful Trader in Cryptocurrency series and tutorial. Thank you guys for tuning in. Today, we're going to talk about mastering the trader. Let's go ahead and get into it. So, what are you? And what I mean by that is, what type of trader are you? Are you a scalp trader? Are you a swing trader? Are you a positional trader? Are you an investor? This is very important information for you to understand about yourself before you do anything in trading. And what I mean by that is, if your life is hectic and you're super busy and you have a full-time day job and you don't have the time to sit there and watch the charts, then chances are you would want to be a positional trader. Why? It requires a lot less time in the market for you to be a positional trader, okay? But there's a certain way that you would want to approach the market as well if you're a positional trader versus someone who could be potentially a scalper. So if you're a chart junkie, if you're sitting there watching the charts 24/7, always looking at crypto news, always involved, right? Always analyzing things, then chances are you're a scalper, okay? You want to see that fast price action. You want to get down and dirty into the 1 minute, 5 minute, 15-minute charts and really trade the market. And you have the ability to sit there and watch as things develop. Just understanding where you lay in time, right? In ability and availability, right? And your requirements that you're going to bring to the market is very important to determine which type of trader you are. So there's some characteristics and things that I think people need to understand before they make that decision, right? So if you're a scalp trader, you're on a very short-term outlook. The time frames that you're typically involved with are things like the 5-minute, the 15-minute, the 1-hour time frame at the max. Your trade duration could be anywhere from 5 minutes or less, right, to about 4 hours. In some terms, right, the majority of your analysis is technically oriented. You're not necessarily worried about what's happening with the news because you're only in a trade for a few minutes sometimes. The news has no bearing ultimately on what the end result of that particular trade would be. So you don't watch the news. Most scalpers don't watch the news. They don't care about the news. They have a high level of trading competency though. So what that means is that they're very familiar with market structure. They're very familiar with how to trade, how to get in and out of very tight, small, ranging positions very quickly. And we show a lot of examples of this on this channel, right? I think a lot of what we do, and a lot of what I do is more steered towards scalping. A lot of the examples that I show, we're scalping. We're not necessarily swing trading or finding the bottoms for positional trades, right? Because we like the price action. And we know that we can do it with a little bit of hard work. And so that's what we do, right? Now, the next level up would be swing trader. Now, this is a person who has a short-term to mid-term outlook. Their time frames are going to be somewhere from 15 minutes to 4 hours, 1 hour in the middle. And their trade duration could be anywhere from 1 hour to around 2 to 3 days. Okay. Now, most times, just a 1 hour trade is not considered a swing trade. Usually they can be taken out within an hour and then that's that. But if you're in a pretty good swing trade, you're going to be in that trade for maybe 2 or 3 days, right? Or until the market starts to reverse its characteristics from whatever direction it's moving in. Now, these swing traders are also very technically oriented. They're not necessarily worried about what's happening with the news, but they will pay attention to it because if something happens within that 2 to 3 days that they're in a trade, it could affect them. And they also have a high level of trading competency. For the most part, they understand how the charts move as well, which is why they're able to capitalize off of lows and highs from price swings in the market between ranges or retracements on higher level time frames. These type of things is what swing traders love to see. Next level up, you have positional traders, mid to long-term outlooks, right? These are the folks who can't sit there and watch the charts at all. And they just want to take a position in something and wait for it to happen, all right? The time frames that they're usually executing on is anywhere from a 1 hour time frame to the daily time frame. The trade duration could be anywhere from 3 days to about 3 months, okay, depending on their risk profile, things of that nature. And these folks are seriously, heavily media and news oriented. They may like what's going on the charts. They may understand what's going on the charts, but this is not necessarily how they make their decisions, right? They're going to make their decisions based off of thesis, hypothesis, all of these different things that they think is going to happen with crypto just based off of the news and not necessarily the charts. They'll use the charts for analysis, but the majority of the way that they lean is based off of news and media. They have a mid-level of trade competency, and what I mean by that is, technically speaking, they may know all they need to know about the fundamentals of the market, but when it comes down to the technical analysis side of it, they're not necessarily 100% there because they don't need to be. Their positions are going to be held for years or months. And then you have the investor, the person with the longest term outlook. These are folks that are looking at a chart, if any, they're looking at maybe a daily or weekly 4-hour chart. Smallest, level of execution that they'll probably go in on is 4 hours. Okay. Now, the trade duration for these folks could be anywhere from 3 months to multi-year positions, holding a position for 10 years, 5, 20, 30 years. These folks are heavily news and media oriented as well, but chances are if you've been holding for this long, you do also have some technical analysis skills when it comes down to it. They don't necessarily have a low level of trade competency when it comes to trading itself, but they're not watching charts every day. Their entire goal, right, is to not watch the charts, which is why they are invested in this. They're not necessarily watching what's happening micro minute to price. They may check it weekly to see where the Bitcoin price is. Oh, did it go up this week? Did it go down this week? Doesn't really matter to them. They have larger positions most times, and they're just sitting there waiting for it to get to levels that they want to take some profits at. So these are the levels of trader. Understand that you have to treat the market a bit differently depending on which category you fall into. All right, so that's why it's important for you to understand what you are as you approach the market. What type of trader are you? Now, the next level that we need to talk about is where you are. Okay, are you a newbie? Right? The way that we break newbies down in crypto is very simple. You just have a low level of understanding when it comes down to it. All right. But there are certain characteristics that I find when it comes to newbie investors. All right. And don't take that term as a sort of an insult. OK, it's a very common term that we use for all types of different things. And you shouldn't feel bad if you're a newbie. You're taking a step that most people are scared to take. So welcome. You are the folks that we're trying to bring up in this space. All right. So welcome. But we're going to talk about you a little bit here, all right, as all newbies get talked about. Now, the newbies are brand new to trading, right? Brand new to crypto. They're heavily influenced by media, friends, family, all of these different people that are telling them to get into whatever coin it is they're telling them to get into. They usually invest too much, too soon, and they do it in an emotionally driven way, okay? So all it takes is for a friend to come up and say, I made 100x on this coin. That will make anyone that's unaware of how this space works go to the bank, take out everything that they have, put it on a crypto exchange and trade. Okay. That's not necessarily the best decision, but this is what newbies do all of the time. And the reason why is because they're usually taught by other newbies who just maybe happen to luck up, or they saw something on social media that gives them the idea that what that person did is also possible for them. But once they realize that trading isn't necessarily the game that they thought it was, they become the student. Now, the student usually is a person with less than 1 year of experience. It only takes you a few months to understand that this market is here to wreck you. And the only intention of the market and the bigger players in the market is to take your money. All right. So once you start to learn things like that as a newbie, you become a student. These people are less influenced by the majority of media, but they still rely on helpful resources to make trade decisions, right? They'll still watch tons of YouTube videos. They'll still go and read tons of different books. And this is why we call them the student. They're in the learning mode at this point, right? And it doesn't really matter whether or not the information is good or bad. They just want information. So they'll consume as much of it as they can within the time that they're allotted to do that. They still have no defined method or system to trade with, right? So they're kind of just taking shots in the dark depending on what they think they need to do, or what their mentor said to do, or what the trading group said to do, because this is usually the time where people get into trading groups and go seek out mentors and pay hundreds of dollars for courses and things that they could have learned for free on YouTube. It's all there, right? I mean, I'm pretty sure that some of you guys that may have actually gotten into mentorships have learned more in just these 3 videos that we've dropped for this tutorial for free than you've learned in some of these paid mentorships. A lot of it is just fluff, and a lot of it is meant to catch traders off guard. And a lot of it is just regurgitated information that you can learn for free anywhere else. All right. So this is why being a student of trading is sometimes the hardest part of you coming up to speed, coming up to age, because you're learning some of the wrong things from the wrong people that aren't really there to help you in the first place, right? Now, these folks tend to take less risk, but they still enter at the wrong time based on emotions. Because here's the problem. A lot of these mentors, they're going to tell you where to enter, where to exit. They're going to tell you about all of the chart patterns. They're going to give you the full rundown of every candlestick that was ever created. They're going to come up with their own patterns and how they play them. But none of these things really bear fruit until you're able to manage your emotions in the market. Okay. And that's where a lot of these mentors go wrong. They don't focus on the person. They just focus on process. And they think that that's all a person needs in order to be successful in trading. Completely wrong. Again, process is technical. It's robotic. All right. It's algorithmic. But the emotions that go along with that trade are the variables that determine whether or not you're successful in that trade. And every real trader knows what I'm talking about. Now, this stage also determines the fate for most traders, because either you're going to get so frustrated with what you're learning in the wrong way that you figure out a way to learn in the right way, or you're just going to give up. So the student is the dividing line between whether or not you become a good trader or a bad trader. Now, there are the neutral lines that we can draw to say you will become a trader. And I think that if you've had +1 years of real world experience, you've really played in the market, you've lost money, you've made money, you understand what it takes to make a trade and the dedication it takes to do this, then I will call you a trader. But not before then, right? Not until you've gotten your feet wet, not until you've gotten your hands dirty, not until you've had your trial by fire. All right. Now, most traders are not influenced by media, right? But they still rely on trusted resources for guidance, whether it's a personal mentor or someone that they found that they really got really good information from and that they actually really learned from, right? Because those people are out there for free and you can find them on YouTube and a number of other different outlets, right? And ultimately, you have to dig a bit to find these folks. And we understand that, and that's what we had to do. And that's probably why a lot of people haven't found us yet, because you have to dig for this information to really good information, it seems like. The sensational stuff is what they like to put out there just for entertainment value, because YouTube is about entertainment. But for the most part, if you want to learn something, you have to dig a bit deeper. Okay, so these are the folks that got to that level of digging to find the proper ways to invest in the market and make some good trades. They do have a defined system or trade method that they use, but they're still a bit undisciplined in regards to execution, right? And making things happen. And they do make non-emotional trade decisions most times. So they've learned how to eliminate the emotions. They've learned how to get over the anxieties and things like that. And that's what makes them a good trader. That's what starts to separate them from the student and the newbie. Okay. Now, there is also the master. Now, the master has 2+ years of real world experience gained in the market. I think that without 2+ years of you really putting in time, effort, learning, education, trial and error into the market, you cannot achieve a level of mastery when it comes down to a number of different things. Not only execution of levels, but execution of, controlling your emotions. Ultimately, right? You need at least that much time in the market and that much experience before you start to really get to that level of controlling yourself completely. So they're not influenced by the media or mentors at that point. They are mentors at that point. All right. They may go back and revisit and rewatch things and talk to people of value to them, but they're not necessarily swayed by them and what they're doing, because they found processes that work themselves and they understand that what you use to trade is not what I need to trade. And my trading style is different than your trading style. And so everything that you teach applies to what you do, and everything that I do applies to what I do. We're two different people playing two different things in the market, and we approach it two different ways. And this is the way that real mastery is gained and found, because that takes a level of understanding that just most people don't have. When you're able to break away from the person who taught you, develop your own trade methods, strategies, techniques, based on the fundamentals of what you gained, then that's when you're reaching that level of mastery. You have your own defined method or system, and you're disciplined in your execution, and you do not get emotionally invested in any trade that you're taking. That's the level of mastery that we're trying to achieve. That's the level of mastery that we believe that you can achieve as a trader, but it's going to take the work, right? You're going to have to go from where these levels, wherever you are currently here on this chart, right? You have to understand that there's always a level to climb. That's why the mastery isn't at 100%, because you'll never know everything that you need to know. There are some secrets, right? And people hold them close to the vest. And as we find out more and more and more, eventually you'll become more and more proficient. But as far as a master is concerned, you'll never be fully 100% competent in everything that happens in the market. All right. And just having that understanding gives you a better way to think about where you are. All right. Now moving on. Next question is, who are you? Because trading is going to help you figure this out pretty damn quick. Technical and fundamental analysis, that's only going to get you so far. All right. This is only 5% of the battle when it really comes down to it. Anybody can find a level on a chart based on a couple of simple rules. The real difference is whether or not you're able to mentally and emotionally hold it together when you're in that trade. All right. The ability to control the flow of your emotions that every single trader experiences is the key to your success. The primary emotions include fear and greed. Everybody knows about this, right? But there's also lots of swings of anxiety in trading. You can sit there and watch these charts, and if price moves against you, you're going to get really scared. But there's a level of anxiety along with that fear that most people don't talk about. Right? And it's the same thing when price moves in your favor. Let's say it's moving really fast in your favor. You get greedy, and there's a level of anxiety that goes along with that greed, right? So the anxiety is really what heightens that fear and greed and makes you make crazy decisions when it comes to things that are happening on the chart based on price action. And here's the secret, guys. Price action is meant to move that way as a psychological game to make you make decisions that you shouldn't make in price. Now, your post-trade reflection and the actions following whatever your trade was, that's going to determine your success. I know you've heard the term revenge trading. I know you guys have heard lots of different terms about not being an angry trader and going in and trying to make it all back after you lose. This is very true. And part of that last bullet point there dives directly into that point. You want to reflect, but you don't want to reflect in a way where you're upset about what happened, no matter what the outcome was. Either it's a learning experience or not. And it should be a learning experience every trade, whether it's a win or loss, right? So that post-trade reflection is important because that's going to help you make a better decision going into your next trade if you approach that with a level head. And that's all it's about. So the difference between winning and losing traders, it's a very simple concept that can be broken down in a very simple way. Losing traders are emotional. They're impulsive in their decision making. They don't think about what they're doing. They feel it out. They go by gut. They go by, oh, I'm going to miss it. Let me push the button. They're emotional. They're impulsive, right? And typically those emotional impulsive things are because they're watching price action. And as I stated before, price action is meant to manipulate you, no matter how you look at it. The way that these charts print out, it's a manipulative thing, right? Understanding that those movements in prices, what brings in that emotion, that's what makes you make the bad decision. Emotional, impulsive response to the outcome of the trade is just as bad as the decision, right? Because if you react bad to a loss, if you throw something across the room, if you kick your computer and you're not able to trade anymore for another 2 weeks because you have to buy a new one, these are the things that wreck traders. These are the things that make people never come back. It's their reaction after the trade is said and done. Because while you're in a trade, you can have all of the hopium in the world that that thing is going to turn out better for you, right? But when it's all said and done, when you actually hit the close button, that's when the real reaction takes place. Being able to control the impulses from that also helps you save yourself as a trader, okay? The inability to identify mistakes or fix mistakes that they do identify will make you a losing trader. If you can't journal what you did wrong and identify what you did wrong, you'll keep making the same mistake. And if you do identify what you did wrong, and then you continue to make that mistake, then that's the problem. These are the things that you want to identify as a new trader to make sure that you're not making these mistakes over and over again. Being unaware of what works for them and what doesn't. You want to make sure that you understand what works in your tool belt and what doesn't work in your tool belt. And if you have a firm understanding of that, then that helps you get out of the losing trader mentality, and that helps you get out of the losing trader rut. Right? So to become a winning trader, you want to use an algorithmic driven decision-making process. You don't want to make decisions based on emotions. Once you do, that's when you start to fall more into that loser category, because you're doing things that are not part of the plan. Okay, you're sort of just winging it. And that's not what you want to do. You want to have a real plan, should be based off of algorithm. If A and B happen, then I'm doing C. If A happens but B doesn't happen, then I'm not doing C. Very simple thing, right? But the hardest thing for traders to really understand that this is the way that you get rid of emotions. It's based on my algorithm, how I'm moving in the market, not how I feel. And then that just makes things a lot easier to accept, because, okay, maybe I need to restructure and retweak my plan rather than, oh, I just made a bad decision. Then you blame yourself more for that, right? You see the difference in how you'll react to sort of a planned approach versus an emotional approach. Right? Non-emotional, non-impulsive response to outcomes of trades. This is the way that you want to go. This is what you need to focus on. As long as you're not being emotionally responsive to your trade and you're not acting on impulse because of those emotions, you're going to be okay. Okay? And the ability to identify the mistakes and fix them. If I can journal what I did wrong and then not make that mistake again, then chances are I'm building really good habits that are going to keep me in that winning trader mode. And also just being aware of what works for them and what doesn't, okay? Don't do the things that don't work and do the things that do work. This is what it takes. This is all that it takes. How do we eliminate emotional trading? First part is you have to have the ability to learn from your mistakes and your successes. And you have to set realistic goals and expectations. The worst thing you can do as a trader is set the goal that you're going to come into this market, make $1 million in 6 months, and then never have to speak to anyone again and just flex on social media. That's the worst expectation you could ever set for yourself. You want to make sure that you're doing things in a realistic way. Understand, set a goal for what you're going to need to learn. Set a goal for what you're going to need to invest. Set a goal for yourself, and don't make things harder than they need to be by setting expectations or having expectations of this market that just are not common. Most traders lose. Most traders lose capital. That's a perfect expectation for you to walk into this market with. Now, you can also offset that by saying that I expect to lose a little bit of money in this market, but I also expect to learn everything I can as I lose so that I can start to win. Those are the proper expectations to set if you're new, all right? If you've been around, you're an old dog and you're a vet, then you're essentially setting goals for the year, and what you're expecting, you already know what's going to come out of this market, all right? But in order to eliminate that emotional trading, you have to set those expectations so that you don't psych yourself out when it comes down to it. You also want to be aware of your emotions and your impulses. What do you do before, during, and after the trade? Pay attention to yourself. And you know what I found? It was very good if I recorded myself as I was in the trade. If I wasn't able to do it with the video, I was able to do it with my voice. And just understanding how I felt at the point in time that I was taking that trade, how I was reacting, right? My emotions and my impulses based on what happened with price is all you really need to understand about yourself. Because if you understand where those emotions are coming in at, then you understand how to control them. And it's as easy as this. Price is moving against me. I know that it's supposed to go down, but it's moving against me very aggressively. I'm going to get out of the trade. I'm only going to take home a little bit. Versus, oh, price is moving against me. I know that price should be going this way. It's just simply retracing so that, it can fill this imbalance based on our rules. Price should do this. Price moves up. Price goes the other way. We stay in the profit of the trade. We don't push the button to exit. All of that is simply broken down a very simple line of where were your emotions and impulses during that price action. So being aware of them is going to help you pinpoint which ones that you need to sort of have a second thought about once they start to surface in the trade. The next part is just being aware of what you got yourself into, right? Like if you're going to be a trader, you have to understand that this is a bit of a learning curve that you're going to have to come up to in order to be successful. And a lot of people rationalize the experience by saying, this is my business, right? And sometimes you take losses in business, and rationalize it in whatever way you want to, but be aware of what you got yourself into. 95% of the people who get into this business fail in this business. So just being aware of that will help you as well, okay? Understand and be aware of what works and what doesn't, as we always say before. And here's the real kicker. You want to practice. You want to set up demo accounts. You want to set up paper trading accounts and practice over and over and over again. And it doesn't matter if you win or blow these accounts. It doesn't matter. The entire goal, right, is for you to understand where you're getting in, where you're getting out. Practice those things, but you also practice your emotional responses to how you're trading. What you're really trying to focus on is where you're entering and exiting based on your emotions. Pay more attention to your emotions than practicing the entries and the exits. Understanding how you're going to emotionally react in a trade is really all you need to do to turn a bad trade into a good trade, and vice versa. Not let a good trade turn into a bad trade. Also, you can use small test accounts. If you really want to play with some live money, use a small test account. Put $100 in there, trade on very small leverage, get an idea of what the market is actually reacting like on that broker, all right? And then you'll have a better idea of how you may react when real money's up to play. When you start playing with larger sums, this is not something that we would recommend right off the bat. Start with the smaller accounts, get an idea of how leverage works, right? If you've never traded on leverage before, and then start to increase incrementally, not by large amounts, because that's the easiest way for you to blow an account out of the water, especially if you're unaware of how these larger accounts move once you start to leverage them. And always journal your experience. Journaling your experience is going to help you understand where you were emotionally as these things were taking place, all right? And time alone will help you define your emotional armor. Just being in the market, pushing these buttons is what it's going to take for you to eventually come to that emotional state where you're not affected in the trade. A few other tips here, some best practices. After entering the trade, do not watch your P&L number. Watch your targets, okay? Watching P&L, that's something that will throw your emotions all over the place. You don't want to do that. Stay focused on your target and your price targets, all right? Follow a plan, an algorithm, a process, etc. Don't follow your emotions until you have experience in trading this way. Until you're able to win 7, 8, 9 times off of a gut emotion, do not follow your gut. Follow the process, follow the plan, follow the algorithm, and eventually your gut will start to follow that algorithm as well, and then that gut will turn into a much more positive thing for you to go off of if in fact you're going to trade off of gut feelings. Embrace your mistakes, right? But only once or twice. Don't become the person that's always making mistakes and not fixing them. The most times that I'm going to allow myself to make a mistake is once or twice before I take a step back and say, pause. Let me take a deeper look at what I'm doing wrong here. So you want to embrace your mistakes, but don't keep making those mistakes. That's the worst thing you can do. Leave the charts, go find a distraction, something funny. If you're in a trade, all right, and things aren't looking too good and, you know, you've protected yourself in that trade and you just need a release, go watch something funny. It seems to turn the tide in the market sometimes when you do that, right? You're just taking your attention off of that stuff and putting it to somewhere where you're going to be able to enjoy things a little bit and laugh a little bit and then come back to your charts, all right? Usually when I do something like that, I end up in a better position. Allow the time and the market to do their jobs. Sometimes the market's not going to move in your favor right away. Allow time to do its job, and if you do, chances are you may end up in the proper perspective when it comes to that trade, right? And create your narrative, right? What are you doing, right? Are you sniping? Am I sitting in position waiting for price to come so that I can take my shot? Or am I the fighter, right? Am I sort of going back and forth with the market? How am I approaching this day? Or am I the chess player? Am I just going to sit back, give a little bit, take a little bit, right? Until I'm able to corner the market in the proper perspective. And no matter which one you are, it's all about positioning, understanding your approach. Create your narrative, and this is the one thing that's going to also help you eliminate some of the emotions when it comes to trading. And again, keep a journal to track your progress. This is the best thing that you can do. All right, some more final warnings that we'd like to give around trading emotions. Losing breeds careless traders. Things like revenge trading, over trading, pushing the reset button on trading strategies. These are all things that will just keep you in that losing trader circle. And eventually you're going to become indifferent to the market. And this is how you're going to quit. So never revenge trade. This is the level you want to get to if in fact you do want to be a better trader. Revenge trading is the easiest way to blow your account, right? Or over trading, taking too many trades in a day, right? You're spending all of your money on commission. Even if you do happen to come out with a very nice trade on the day, you're going to spend half of it on your commissions just trying to catch that opportunity. So scale back a little bit, wait for the proper opportunities and then take those. These are the things that we think, kind of just brings losing traders in that circle. Revenge trading, over trading, and just trying all of these different new strategies every other week. You're doing something new. You're buying a new indicator. You're listening to a new guy on YouTube. Find somebody that gives you really good information, 2 or 3 people, and stick with those folks, okay? Learn from them. That's the way that you start to really lock in, all right? Also, winning breeds careless traders as well because people become overconfident. They take larger positions and then they end up getting liquidated. Very common tale in trading. You're ignoring the little things in what you did to become a winning trader. That's always something that happens to winning traders. And you're over trading and under evaluating. You're sitting there not doing the things that you would normally do for your analysis, and you're over trading, trying to get more and more and more out of the market. And in all reality, you're just becoming greedy, right? So it circles right back to that beginning emotion that we were talking about. Now, when things get tough in this market, there's a few ways to deal with losing streaks, all right? Now, I showed you my 12 loss losing streak. If you're able to tell a story like that, just let me know in the comments. Did it drive you nuts, or what did you do in order to get over that losing streak, to hit the reset button per se? Here's a few things that I did. I just detached from the market. I didn't trade. I took family time. I took vacation time. I pushed the reset button, literally a life reset button. Because without doing these type of things, you're going to focus on the market. You're going to focus on those losses. You're going to focus on trying to get back. You're going to focus on some other strategy that's going to help you win and reclaim all of those losses. That number's just going to burn itself into your head. And you'll always be trying to go back to fix it. Don't do that. All right, give yourself some time, detach yourself from the market, find a new approach, come back to it. Study techniques and methods via the practice and demo accounts. You do not have to be in live money trading. Study yourself, study your emotions as you do this on your practice and demo accounts. It's going to help you once you reapproach the market. And just reduce your exposure. Use less leverage, tighter stop losses. If you must trade, trade less. Do not over trade. You'll eventually get back to a winning way. And remember why you started. If you're ever on the verge of quitting this game and you understand why you started, then remember why you started. Just doing these things alone is going to help you sort of recenter, refocus, do things like meditation, do things like go get a massage, take a road trip, go swimming, go sit in a sauna, go do something, go to the gym, anything but trading. Okay, and do it for a number of days so that you're not feeling compelled to come back to the market. And when you do, you'll have a brand new, fresh approach. Don't worry about the losses. All of that eventually will come to bear if you know how to fix your attitude and emotional state before you come back to the chart. And also, when things get good, you have to know how to deal with your winning streaks, right? You want to maintain your focus. Remember the little things first that help you win. They will continue to help you win if you don't abandon them. Don't increase your exposure or your leverage, right? Use compounding methods instead. If I win $100 in a trade, that $100 can be used to compound whatever percentage of my account I'm using for the next trade. Don't say, oh, I won $100, so now I'm going to kick my leverage up to 100%. No, that's the wrong way to go about it. That's usually the time when you're going to get ultimately liquidated in that trade. You want to maintain your journal, right? Usually when you're winning, your journal can get stale. You're not capturing every trade as you did before when you were kind of breaking even or losing. because you're not necessarily in learning mode anymore, but this is going to be your greatest teacher, your journal, right? This is your greatest mentor because you're able to go back and look at all of the mistakes that you made in live markets and demo accounts. It's hard to do that in any other book in the market, right? So use this journal. Make sure that you're still logging in this journal as you're winning as well. And don't become too overconfident. Don't revert back to bad habits, right? I think that's plainly stated. And continue building knowledge from reputable sources. If you find people that are giving you great insights into this market and you've been winning with them, stick with them, right? And continue to build your knowledge and always be trying to set new goals. This is the way that you will continue to grow as a trader. So, what are the key takeaways for mastering the trader? You want to understand who, what, and where you are when it comes to the subject of trading and investing. Without understanding these things, you're sort of just shooting in the dark, taking shots without really understanding what your main objective and goal is. And in trading, that's probably the worst way for you to start. All right. Your emotions are going to control your results. You want to remain as neutral as best you can in the market. You want to set proper expectations for yourself from the start. All right. Don't get into this market thinking that everything's going to be 1000x within 30 days. Set the proper expectations, folks. That way you stay in the market. And master what works, disregard what doesn't. We're going to say this over and over and over again. We show you things that work. Soon as something doesn't work for you, it's not the time to throw it out. Try it. If it works, sometimes you're able to break even, then maybe you should find a better method. If it works all of the time, then that's what you're using. And practice. Trade, entry, management, exit skills. You want to practice your emotional impulse and control. These are the things that are going to help your entries, your management, and your exit of your trades. Understanding the emotional and impulse control will help you with the trade entry, management, and exits. And keep an active journal, right? You want to make sure that you're able to log your activity in the market. It's important for you when you go and look back at what you did right versus what you did wrong. All right. So that's going to do it for this lesson here on Mastering the Trader. Thank you guys for checking this out. If you have any questions, please go ahead and leave them in the comments. Please like, subscribe, share, click the bell notification if you want to be aware of when we drop our next videos. The next one that we're going to take a look at is actually mastering the trade itself. All right, so we're going to talk about the execution piece next, all right, and how to take advantage of those things there. So ultimately, thank you guys for tuning in. It's your boy Maestro. It's the long and short. Don't forget to follow us on our socials and stay tuned for the next video. We'll be dropping it soon. Thank you so much. We're out of here. Peace.